Hey everyone, happy Thursday, February 29th. Happy leap day. It's about 10:45 on the West Coast and time for another market update. And no, unfortunately, mortgage rates did not make a giant leap down this week, but we held our ground. We actually dropped a little bit. So, really busy week of news. It seems like it covered across the spectrum. So let's get right into it. First thing we got was January's PCE, the ever important PCE inflation report. This is the Fed's favorite form of inflation to look at, especially the core. So both basically came in as expected. The headline up 0.3% for the month, the core up 0.4%. It was hoping to come in a little lower than that. And as you look here, a little more detail, the headline's now down to 2.4% year over year. The core is down to 2.8%. And, there's that quote from Powell about Chairman Powell from the Fed. They want to get that core down to 2%. So 2.8%, I think it's the closest, the lowest it's been in quite a while now. So that's good. It's on the way down, but that plus 0.4% month over month. Do the math on that year over year. That's 4.8%. That's almost 5%. So that's no good. We don't want to see that. So hopefully the core comes in a little bit better as we go along. Again, shelter really was pushing this up. We all know, apartment list came out again today with another, the rental report showing rents remain pretty flat to down year over year. CoreLogic's rental report kind of showing the same thing. So we know that shelter inflation is lagging behind in these reports. But overall, it was good to see it not come in as a negative surprise like the CPI and the PPI were earlier this month. That was the worry. So we held our ground with that report, so that was good. January new home sales came out today. For the month, they're up 1.5%, up 1.8% year over year. 1.5% was actually expected to be higher than that. So a little bit of a disappointment with that number. And let's take a closer look. So again, annual sales pace is up a little bit from last year, meaning the home price is down year over year 2.6%. Keep in mind that is not appreciation. So the news media might make median home price down 2.6%, and this again new home sales. So these are new builds, signed contracts in January. So that's just based on the mix of builds. So builders are building more lower price homes. So that's bringing that median down. That doesn't mean your home is losing value. And then again, you can see inventory ticked up a little bit compared to December. Reported month supply, we're at 8.3 months, but again, only about 80,000 of these homes are completed, so that's more about 1.4 month supply. So again, a little bit of a disappointment for new home builders in January. Next thing we got, again, January pending home sales. So like I said, a lot of stuff this week. January pending home sales came in at down negative almost 5%, 4.9% for the month, down negative now 8.8% year over year. Quote right here from Dr. Lawrence Yu, the NAR's chief economist, consumers are showing extra sensitivity to changes in mortgage rates, ... and that's impacting home sales. Well, yes, I hear about that all the time. And again, we got to blame the lenders, I guess, got to blame mortgage people. But yes, mortgage rates, being so volatile and up and down and not being able to get a foothold going down, that's definitely had a little stop-start effect, keeping, really some nice positive momentum going in pending home sales. And again, pending home sales, these are homes that went pending in January, didn't close quite yet, but at least went under contract. And again, negative 4.9%. They were expecting it to be up 1%, so really almost a 6% shift right there. Appreciation for December. We finally got December to end off the year for FHFA and Case Shiller. Let's take a closer look at that. So Case Shiller came in at plus 0.2% month over month and ended the year at plus 5.5%. Little quote here from the head of commodities for SP&J. 2023 appears to have exceeded average value home prices gains over the past 35 years. So yeah, really good year ended up being for home prices, which a lot of people going into the year were expecting home prices to drop quite a bit. Even people being a little bit more optimistic, maybe even a small drop, but didn't come close to that. In across the country, 5.5. Looks like a lot of the metros are starting to jump in LA, Vegas, Charlotte, Chicago, Miami. And then FHFA, which isn't on this graphic, that throws out jumbo and cash deals. That came in, that ended the year at 6.6% year over year, only up 0.1% month over month. But, Case Shiller plus 5.5, FHFA plus 6.6, Black Knight 5.6% for the year, CoreLogic 5.5. So all the metrics about 5 to 6% or so home gains across the country, which, again, good for homeowners. That's awesome. Initial job claims came in at 215,000, so a little bit above the estimate of 209,000. So again, seeing pretty low with these numbers. Continuing claims ticked up a little bit. So going to have to, again, the Fed's paid a really close eye on employment. So any employment related data is always important. Some miscellaneous stuff. We got the second reading of the Q4 GDP, and that came in at plus 3.2%. So that's Q4, the second reading. So it was expected to be at 3.3%, so a little bit of weakening. I believe Q3's final reading was 4.8%, so definitely shows the economy slowing down a little bit. And the other miscellaneous thing I wanted to point out, tax refunds, it looks like they're down about 30% this year is what the metrics are showing. So last year, I think the average was about 2,000. Right now, it's an average about 1,400, so $600 difference. So that's not good for us, but that's deflationary. The less money we all have, the less money we'll spend. Maybe hopefully that helps with retail sales. It helps with these inflation numbers, and then we get better mortgage rates a little bit faster. Next thing we got average conventional ended up down to about 7.10. Last week it was 7.16. This inflation, I think yesterday we came into the day about 7.15, so a little small drop today based on this inflation report. So again, not where we want to be, but holding our ground right where we're at. Again, we want to get down in the mid sixes at the very least, I would hope. And we've been there a couple times and we keep getting pushed back, so that's not good. Important dates coming up. So really important one probably going to be this BLS jobs report on March 8th. Again, Fed's paying really close attention to these job numbers. This last one that we got, the January numbers here in February, killed us. So we got to make sure that we we can't make sure. We got to cross our fingers and hope that we get a good number with that BLS jobs report. Then we get another CPI report. And then the Fed on March 20th is their next meeting. Right now, that's down to 2.5% that they'll make a cut. So looks like that's off the table unless we get some crazy data before then. The May meeting right now, May 1st, I believe, is that meeting. That's showing only about 20% chance we get our first cut. So that's slipping. That's going away. And then the first cut in June, the June meeting is showing about 50, 60, I think 62% or so. Then we'll get some sort of cut. Actually, 50% will get one cut, 11% will get two cuts, which would be, knock on wood, that'd be awesome. So, so that's where the Fed's looking at things right now. Like I said, we need the data to start going our way. But again, there's so much pent up demand right now. Like those pending home sales show, people are just, the borrowers are backing off. Rates are higher than they like. They want to hold off, like a lot of these metrics are showing. But keep in mind, just normal supply and demand. When all of a sudden rates come down, or as they come down and more people want to buy a home, that's more and more competition to buy that home. That means prices probably come up. That means it's not as a good market for a buyer as it could be right now. So that's just something to keep in mind, just basic supply and demand. The more demand, with a lot of not very much supply like we have right now, that's going to create a jump in prices as well. So if anybody needs anything at all, please don't hesitate to reach out. Otherwise, have a great week. Thanks, guys.